That's why your existing bonds go up in value when the interest rates go down, because you're sitting there with a cool 5% 10-year bond, and the other person has to buy like a schmuck at 4 1/4. A couple of things that have happened over the last week that are of note. We have the Trump revised tariff policy, which sparks market volatility. So President Trump's new reciprocal tariffs announced July 31st to August 1st, targeting dozens of countries, triggered a risk-off sentiment, causing a sharp drop in the U.S. stocks and bond yields, with the S&P 500 and NASDAQ falling significantly, which I love. As I always love to joke, especially on Price Action Live with Mike, is I never bet against the empire. And whenever the price goes down, my God, I'm going to bet on a V back up. Because every time I've not bet on the price moving back up to all-time highs, despite all the news happening in the world, I have been dead wrong. We have the corporate earnings drive mixed market signals. So strong Q2 earnings from companies like Eli Lilly and DoorDash contrasted with tech disappointments, with AMD dropping 8% and Intel slipping 2.1%. Tesla faces $243 million autopilot crash ruling. A costly lawsuit ruling against Tesla for its autopilot system led to a stock decline, with the company planning an appeal amid high social media attention. Although that Tesla stock completely reversed, and I think it's like back up again.
Cassie Woods expects it to be like trillions and trillions of dollars. Was it $20 trillion valuation? It's crazy.
Up and to the right. Up and to the right, folks. Antitrust lawsuits targets BlackRock, State Street, and Vanguard. A major lawsuit against these investment giants for alleged anti-competitive practices shook investors' confidence, impacting their stock prices and market sentiment. Did it really? Did it really? Berkshire Hathaway's mixed earnings report. So Berkshire Hathaway's Q2 earnings showed strength, but highlighted its large cash reserves, signaling caution and impacting investor perceptions of market opportunities. When Buffett is sitting on his hands and sitting on a pile of cash, maybe it's time to do the same. I disagree. Put my money in the market. Wait for it to go up. Never sell. No stop loss. That'll be my new nickname. No stop loss, Tom Hartman. AI sector resilience amid market slowdown. So despite broader market declines, AI-related stocks held up due to sustained investor interest in the AI growth theme, as noted by BlackRock's commentary. And Peter, super excited about GPT-5 and all the new AI developments. I don't see anything stopping this train anytime soon. And finally, bond market sees value in longer maturities. Edward Jones highlighted value in the 7 to 10-year U.S. investment-grade bonds as investors sought to lock in yields amid rate cut expectations. It's so interesting. It's so interesting. People, in general, if you're not in the bond market, you don't necessarily understand. But when yields fall down, right, when you'll get less for buying that bond now, it makes the previous bonds that were at higher interest rates more valuable. That's why your existing bonds go up in value when the interest rates go down, because you're sitting there with a cool 5% 10-year bond, and the other person has to buy like a schmuck at 4 1/4. So they're like, hey, give me your bond. I want that 5%. And so as yields go down, bonds become more attractive. Peter?
Yes.
I love knowing about the markets. I love being part of the markets. I love being a market participant. I love when I go on the 1 second on a low float chart and I press the button and I can see that candle go and I go, that candle's me.
You've been making a lot of money recently with trading too.
Oh, whoa. No, I'm not making any money at all. I don't make anything at all. I'm dirt poor. Don't look at me for anything like that.
All right, Tom.
I have had like a 92% success rate in some of my calls. But who's counting?